I currently live in Perth, Western Australia. I have a wife and three young boys who are currently 9, 6, and 4. So, yeah, obviously getting older and older, but they are keeping us very busy. Big sports fan, Newcastle United. They are my team. Still follow them very closely, but it is increasingly difficult being able to watch them out here in Australia because of the time difference. So, for instance, Champions League last night, 8 p.m. kickoff in UK is 4 a.m. in over here in Perth. So I do get up early, but I not early enough to watch the beginning of the matches. But yeah, Newcastle United and love rugby, uh, tennis, squash, badminton, any sport basically. Terrible at swimming, absolutely shocking. But yeah, I do love going for a swim, even though I'm terrible at it. Other interests include property and traveling. So back in the UK, lived in a property where it was very much run down, got involved pretty much from scratch and doing a lot of the work, apart from the ones such as plumbing and electricity. That's some of the items that I would uh, pass on to the experts. But yeah, very much enjoyed that whole process, renovating properties and also traveling as well. Slovenia, Thailand, New Zealand are some of my favorite countries. And now that we live in Australia, we are absolutely loving life here too. Now, I do claim to have a few special talents. I claim to know all the capital cities in the world. I also ran the National Athletic Championships of 400 meters, which isn't a claim, that is more a fact. And I can do the worm, which again is another fact. Um, so worm is a dance move. I will not be doing it today or tonight, wherever you're based. That will have to be saved for another time. And yeah, born in London, UK, gradually moved to the west towards Bristol. And as I've mentioned, probably about 3 or 4 times now, I live in Australia, in Perth. So that's a brief introduction about me. Let's have a look at the book. Well, this is an extract from the Six Figures from Scratch book, and it's. I'm going to click on this link here, which will take us to my specific part, which focuses on supply and demand. I talk about some past results, what I've achieved, how I got into uh, how I got into trading, my background, and then I start talking about the strategy itself. So, step one, identifying area supply and demand. So, an area of demand is essentially an area where price is looking to go up. Supply is an area where price is looking to go down. We're trying to capture or catch those moves and look to profit from the more extreme bullish or bearish move. So, how do we identify that on a chart? Well, if we see this period of consolidation and then a strong move lower, indicated by that bearish candle there, breaking lows, that's our sign that sellers are starting to step in and we want to identify an area where we can look to go short from. We don't want to be going short when the move is already happening. We don't want to be chasing the trade. We want to identify an area of supply, which is the previous bullish candle, drawing a rectangle, and then waiting for a retracement back into that zone. So the area of consolidation highlighted here, you then have that noticeable move downwards, that bearish move. We want to take the previous bullish candle before that strong move and then identify a supply that way. The exact same for a demand zone. We want to identify that strong move up following a period of consolidation, taking the previous bearish candle before that move up is taking the previous bearish candle before that move up, and that's our area of demand. Okay, and then the second one is the retest. So on the retest, this is where we may get a more impulsive move, or we may get a gradual retracement. So an impulsive move is typically defined as one bearish or bullish candle, very strong move back into a supply or demand zone. Or a more gradual retracement is typically defined as I would say, a number of candles, slow trend line, similar to this, where you've got buyers stepping in, then sellers, buyers, sellers, just gradually coming back into it rather than a strong impulsive move straight away. So gradual is favored over impulsive retracement. And then the reversal candle, our confirmation. So we have either a pin bar rejection, which is either a bullish pin bar here. The body's 50% less than the overall candle. And the same for a bearish. So we have a longer wick at the top for a bearish and a longer wick for a bullish. These are some other examples of bullish pin bars and bearish pin bars. Doesn't matter what color it is. So here it's obviously green. Bearish pin bar is if you still have a strong rejection, that extended wick, that's a good example of a bearish rejection. You have engulfing candles as well. So this is where the bullish candle here is engulfing the previous bearish. As long as the body engulfs the previous bearish, that's fine. It doesn't have to be the wicks. That is an added bonus, but as long as the body engulfs, that's what you're looking for in terms of confirmation. There's also tweezer rejections as well, where you may see or might arrive to the party slightly later following a rejection. If you see another pin bar rejection, that tweezer rejection from a level of supply demand, that is still a valid entry point as well. There are also 3 candle swings, which we'll touch base on as we go through some of the live charts. But here you can see your engulfing confirmation at an area of supply and then a bullish engulfing candle from an area of demand. So these are opportunities to either go short or long. So once we have a confirmation, we look to set our stop loss and take profit. So we want to be setting our stop loss above the recent highs from a supply zone. Take profit, targeting lows is the ideal scenario. If you can't target lows with a 2-to-1, then you would be anticipating new lows, making it slightly less favorable. The exact same for long positions. If there is confirmation from a demand zone, you're going below the level of demand or where there's recent price action, and targeting recent highs or a potential area of supply. Once you've got that confirmation, you've identified where your take profit and stop loss is going to be. You're looking to enter the trade. You've entered the trade, and then it is, in most cases, very much a set and forget rule. There are times where you might have to manage your trade, and that is where you've got high impact news events. So that's rule 3. So if you've got interest rate decisions, CPI, non-farm payroll, these are some of the big events which are likely to drive volatility in all asset classes, regardless of which FX pair you are trading. So these are times where you just want to be patient and certainly keep your risk minimal. The other rules are 2-to-1. So we don't want to be targeting a 1-to-1 trade. We want at least 2-to-1. And then if you're achieving a 50% win rate, that is very, very good. It's a very profitable system you have there. And you're only using fresh area supply demand. So if prices come back into a level of demand or supply multiple times, and you're seeing confirmation each time, you're not looking to re-enter off that same zone. You're only looking at that first retest and ideally immediate rejection. I then go on to talk about some examples where we have strong confirmation candles and from levels of supply or demand. So that's an example of a bearish pin bar there. And some of these examples are very range-bound activity where you've got bearish pin bar rejection from a level of supply where you're starting to break lows. You've got a very weak level of demand there. These opportunities can be done, but does carry a lot more risk. And we want to be going with the higher time frame sentiment, whether that is bullish or bearish. So if I go back to the slides and let's have a look at these individual steps. So we've got here 7 key steps or 8 key steps, including high impact news events. So we've got market structure on the higher time frame. That is step 1. And when we're looking at the charts, and using an example like Swiss yen, identifying market structure on the higher time frame. What I mean by this is, okay, over the last 2 years, so from October 2023 to November 2023, essentially the last 2 years, is price bullish or bearish, or is it ranging? Now, given where price is now compared to 2 years ago, it is very much bullish. Doesn't have to be exactly 2 years. You can even take that slightly more, 2.5, 3 years. All we're doing is just trying to establish what our overall bias would be. And a lot of that will hinge on recent sentiment as well, because you might have very bullish price action overall, but the last 3 or 4 weeks might be very bearish. Doesn't necessarily mean you're going to take long opportunities. But looking at this particular example of live price action, Swiss yen is bullish overall on the weekly. And that also applies to the daily, because here we are at those all-time highs where we are just continuously trending higher. So we've established market structure in a higher time frame. We're now looking at the lower time frame as well. So I use the 1 hour time frame to identify opportunities as well. But when we look at the 1 hour as a starting point, we are just looking at the last 2 weeks of price action. So 6th November to 21st of October, difficult. We've got bullish momentum, bearish, bullish, bearish. We're seeing very slight, but overall it's ranging price action. I'm not really getting any kind of clear indication here whether to go long or short at this point. So if obviously price keeps moving higher, demand zones will start becoming more and more favorable, but we're not at that point yet. So market structure on the higher time frame, we've said bullish. Market structure on the lower time frame, we've said ranging. We want that to be aligned to give us a more favorable opportunity. So if we now look at step 3, this is where if we are looking at opportunities, we want narrow consolidation on the 1 hour time frame. This is going to give us our area, our initial area, supply demand. So if we take a step back here, we do not have a narrow area consolidation. That is actually one bearish candle before the move up, but a very strong move. Typically, what we want to see is an area like this where there's there's indecision, but there's little volume. Here you've got imbalance in price. Here's balance in price, imbalance in price. So our narrow consolidation is this area here. It's just not from an area where there's a favorable level of supply or demand. So we want to see narrow consolidation before a move up. So here, even this example, there is narrow consolidation, but note how it's a very gradual move lower. It's not moving evenly. There's a slightly more favored bearish intent at that particular, or within that particular 4 hour period, then buy a step in. But if I look at this example here, we can still look at potential opportunities. We are just favoring narrow consolidation before a move up. And then once we've identified that, we want to look at that aggressive move up or down. So in this scenario, we've got aggressive move up. If we start to break previous highs, we have an even more favorable opportunity. So how we define aggressive move up is very much based on recent price action as well. You've just got continuous bullish intent. So that's your sign that buyers are stepping in at this key level, indication that institution, the banks are getting involved as well. And then we want to see the retracement. So I mentioned a gradual or impulsive retracement. This is a good example of a more gradual retracement. You start to see more impulsive move toward the end, but it's more gradual because there's buyers stepping in. Sellers are gradually coming back to that area. Whereas here, that's a more bullish impulsive move, but the retracement overall is gradually moving lower. And then we want to see a confirmation candle. So here, we technically have a bullish engulfing candle. So note how the wick isn't actually engulfing the previous bearish. But we still have an engulfing candle. Now, this is where you've got technically a weaker confirmation given the size of the candles. So note how we've seen some fairly strong moves. What you would expect to see is a strong bullish move from there. That's not really telling me that buyers are really looking to step in. That's a weak confirmation, but technically still valid. So it's still a valid entry. And then you've got your stop loss and take profit. So entry will be at the close of the engulfing candle there. Stop loss, now you want to have it as you've got, in this example, 3 options. So aggressive would be as a minimum 5 pips below that recent candle there. So that's 14 down to 19. So that's 5 pips. Now for the yen pairs, you can look at 10 pips. This is only the yen pairs though. So Australian Swiss, for instance, you're not looking at 10 pips, but 14 down to 24 is also a consideration. And then you have something known as your passive stop loss. Now, this is where I'd say 5 pips below the demand zone. So from 34, that area there, by the way, down to 39. But we do have all this recent price action here to bear in mind, which does make it difficult. So this is an opportunity to potentially extend even further. So our most passive approach would be at the bottom of the wick and then 10 pips below that. So that, let's say 50 down to 60. And then, when you set your stop loss, can you target a 2-to-1 targeting recent highs? If that is the case, which we do have here, because those are your recent highs, you have a potential opportunity to go along there. We just know that the confirmation is a bit weaker. So certainly can consider this, and given the fact that the higher time frame is so bullish overall, these are valid opportunities. And then, I mentioned that high impact news events as well. So this is when you want to be checking on Forex Factory just to make sure that there aren't any high impact news events impacting your potential long opportunity or short opportunity. So I mentioned CPI, interest rate decisions, non-farm payroll as well, any kind of job report. Those are the high impact news events which you would typically see on Forex Factory. So for instance, we had the interest rate decision from the RBA earlier this week. We just had interest rate decision from the Bank of England. These, if you're trading the pound related pairs, those are the kind of opportunities you want to look to go short from. You look to cut your trade or look to reduce your lot size? Right, let me just go back to the slides. Right, so this screenshot here is an example, or it was actually the first post I put on the trading cafe. So thank you for all your comments, for those who commented. And it was all about the expected direction. So where would you expect this trade to go? And I mentioned the profit target in the post being the particular focus. So you can see here with that pin bar rejection, you're anticipating new highs, you're expecting to break that structure. So it already makes it a riskier opportunity. We also had that break near retest, no confirmation. We came back to those highs, sellers stepped in again, making it a riskier opportunity as well. When price did come back to the demand zone, it's a very good pin bar rejection, and also that green line is recent daily highs, so it's a key level. In fact, we had an aggressive move up, breaking structure. It's a valid trade, but all the elements that I've gone through, anticipating new highs, that near touch, failing to make new highs, these are reasons to reduce your risk because they are negative elements to consider. And the other post I put on was around what the potential problems are with these setups. So with the first trade, you've got a strong rejection, good pin bar rejection, but very extended. You're also at that point expecting to make new lows. So at the time, these are your lows. And that red line indicates a key level on the weekly where we've had multiple times buyers stepping in historically over the last 2 years. And yeah, the second trade is very similar as well. Now, this is an example of a 3-candle swing, but a weaker 3-candle swing because typically the second candle is more of a doji candle, and the third candle then close below the open price there. But ultimately, where it does close, stop loss above the supply zone, 5 pips, you're still going to be anticipating new lows and you're going to be expecting to break another key level. So it's making the trade more and more difficult. These are the problems that you are going to come across, even when you have good area supply for making new lows. You're going with the higher time frame, making new lows there, breaking those lows. So always worth bearing in mind the all the elements when it comes to the strategy. And sometimes it is best just to stay on the sidelines, but certainly looking to reduce risk if you're taking these particular or similar opportunities. Okay, so I'm now going to look at some of the live opportunities in the market. So we'll just look at some of the pairs. Recently, this is an example of US dollar yen. So if we're looking at supply and demand and looking at firstly the weekly, so last 2 years of price action, very range bound, but recent sentiment becoming more and more bullish. On the hourly, we have these recent highs being broken with an aggressive move. We came back into that area, saw confirmation. There's your 2-to-1 targeting recent highs. But during that, we also had a flip zone. So this is a flip zone where momentum is very bullish at this point. I'll just zoom out. So these are your highs. If I extend that. Continuation of that bullish momentum. And then here, just about breaking those highs. So I'm ignoring the wicks. I'm concerned about where price actually closes. So it closes above the recent candles there. And then we see a very strong bearish move. That's our indication that sellers are now really stepping in at this general level. And that's defined by the flip zone demand, turn now supply. So you're basically saying at the time you're looking at that as a potential demand zone, saying, okay, well, I might have a, a long opportunity here. The fact we see a very strong bearish move is your indication to potentially go short. Um, 1 hour flips. We use a limit order here, and then you're looking at potential 2 to 1. You can use more aggressive stop loss as well. And essentially, it's a way of using two different strategies on US dollar yen there. If we look at one of the Swiss pairs, so what's been a good recent example? Something like New Zealand Swiss, not at this particular time, but certainly, in recent weeks and months where there's been very strong bearish momentum, there's been opportunities to go short from supply zones. And you have to only really look on the weekly to see how bearish it is. Just continuation lower. So we're favoring short opportunities. But you saw there a demand level where you've got this more extended area of balance and then imbalance up. Note there's a couple of bearish candles in between. I don't mind that necessarily. It's just then observing what kind of reaction you get. So you've got a good example of a bullish pin bar. Entry, you can target 2 to 1, targeting highs. It comes back to those highs. Higher time frame is bearish, and then we see it move lower. So it's a good area to target. And if we look at some of the other pairs, so something like New Zealand CAD, where you might have, or you do have, sorry, overall bearish sentiment. You've got imbalance in price. Don't technically touch the supply zone, but you see confirmation. You can still look to take those 2 to 1 opportunities. And then we actually had a pin bar rejection there. So this is an example of an aggressive stop loss. So that's entry to stop top of the wick, 11 pips, 16 to the top. Oh, sorry, 5 pips above the recent wick. And then trying to target 2 to 1, targeting lows. You can look at the passive approach as well, which would mean going 5 pips above the supply zone, targeting 2 to 1. But it does become increasingly difficult because you're then, I say you're going to no man's land, but we've got some price action back in April 2025 to contend with. So ideally, we want to be targeting recent lows or recent highs if it's a demand zone. So that's like New Zealand US dollar as well. We might have a potential retest back into this more discount premium level. So it's been very bearish as well. Daily continually making new lows. And then if we look at something like Australian New Zealand dollar, where it just continues to trend higher, there are potential opportunities in Australian New Zealand dollar, but they are more extended. But you can see balance, imbalance, touch, rejection, opportunity to go long, 2 to 1. Some areas are going to be fresh where they're not actually retested. But the more time price moves away, the less favorable they become. So you want to focus on more recent areas. Okay. Right, we look at some of the questions that have been submitted. So, Clarel, do you use Forex, and how can you help me trade with you? So, yeah, I do trade Forex, and the best way is to learn the strategy is just to go through the material that we have on the cafe, all free as well. Jesse, just a couple of questions and some feedback. What's the capital of Jamaica and Chile? Love a capitals question. And obviously, I could have just looked at these prior to the question, but I did know this. So it is Kingston and Santiago. I'm guessing it's the habit of setting for getting trades on my live demo via TradingView. I'm just wondering if you needed to, could you adjust your stop loss mid-trade? So you would only adjust your stop loss mid-trade if there was a high impact news event or you're going into the weekend. That's the only real time you'll do it. You mentioned placing stop loss at the recent wick or 5 to 10 pips, either from the supply demand zone. Which wick are you referring to? Confirmation or retracement wick? So the most recent price action at the supply demand zone, it could be the retracement or the confirmation. It's just whatever the most recent price action is. Sorry, excuse me, I just got to take a drink because my third session in a row, so I'm just trying to catch a bit of a breather. I do apologize. Right, and you found the consolidation, you found the breakout, but it doesn't quite make new highs or lows. Does that mean the trade is less favorable even though the retracement confirmation is good? Is there a difference between breaking recent highs or lows and breaker structure? So, yes, it would be less favorable in that scenario. And the difference with breaking recent highs and lows is not as favorable as breaking structure. Breaking structure is when you start to break key levels, whether that's bullish or bearish key levels on the daily or weekly. And you've been learning my strategy for the last 7 months, jumping onto the live sessions when I can, through the replays in the class, and have my confidence in this journey. Excuse me, has grown to a point where I want to move to live. I don't have the funds to pursue the academy, so my question is, what more do you teach in there that we don't get here? So in the academy, there is the full course, and there's also the daily sessions that you can go through the live markets with myself. You can ask questions, talk about any issues that you might be having with your trading. And we have the legacy sessions as well, where you can talk with me one-on-one to go through any particular topics regarding trading. So you had some examples as well, Jesse. If we look at this particular example here, now we want higher time frame alignment, ideally, but here you've got an area of imbalance. You're breaking some structure, but you've ultimately got some price action to your left here. Now, you do have a rejection. Just be mindful of your stop loss placement because it is right at the top of the supply zone. Give yourself at least 5 pips above that area because you can still easily target 2-to-1 targeting recent price action now. And then the next one here, so really strong bearish move. You then get a bearish pin bar, so it's the 4th candle. You be more passive, your stop loss there, which is better. It can always be difficult with price action to your left, but you always have to tell yourself, okay, well, can I target 2-to-1 with all that price action to my left? And you can, but these are still technically weaker, given all the recent price action. So here you've got balance, imbalance down, touch rejection, targeting recent lows. So there are good elements there. But these are opportunities we look to reduce our risk on. Again, balance good, imbalance good, retracement, rejection, stop loss just need to go above the supply zone. Apart from that, spot on. And then here, this is good because actually you've got a change in sentiment where you've got bullish, bullish price action, and then you see this pullback. Now, this is a risky supply zone because there's no real breaking structure. You ultimately come back to an area where you've got balance, gaps open higher, but we're seeing buyers stepping at that level. So I'd avoid going short there. If the higher time frame is bullish and then you've got equal highs being broken there, touch rejection, good. It's a good opportunity. And then here, I'm focusing more on the recent run where you've got bearish imbalance, you're breaking lows, very aggressive selling, good pin bar rejection. Be mindful of that wick there. You might want to go 5 pips above just to give yourself a bit more cover because you can still target 2 to 1 targeting those. And be careful there, especially when price gaps open lower. You have an entry still, but those are riskier. Right, Gurkhan. So when you mention analyzing around 2 weeks of data for structure, sometimes the market doesn't quite give a clear direction across that period. But if we see 1 week of data, we can see a clear direction. In that case, can we analyze the market with 1 week of data? So if you're referring to the 1 hour chart, that's fine. Just make sure that you're aware of where price is relative to the higher time frame. Yeah, go back to the Swiss yen example that I was looking at earlier as well as a go-to. Doesn't have to be 2 weeks, but you can look at the last 1 week as well. If price hits a 2 to 3 week old demand zone, but current structure is bearish, would you still expect a reaction or you look for confirmation? So the demand zone needs to be making new highs ultimately at that point. That demand zone you're referencing is a weak level demand, there's no real intent from buyers, then no, you're not looking to go long there, especially if there is recent bearish price action. And when we are marking zones after consolidation, 1 candle impulsive move is enough, or we should have at least 2 to 3 candles. 1 strong candle is absolutely fine. 2 to 3 is fine as well. There's no specific number in that scenario. And as you love sports and you're born in the UK and now live in Australia, and both countries are passionate about cricket, may I ask if you enjoy watching cricket? I don't mind cricket. I must admit, I'm not a huge fan. If the Ashes are on, I'll definitely watch that. But yeah, I like cricket. It's just not my main sport. And then you had a couple of questions on the charts as well to go through. So I don't know if there were specific questions, but I think it's more just to analyze these trades. But you've got here imbalance up, touch, confirmation, good. Continuation, breaking highs, good. We then come back into that demand zone. Note how the confirmation is a bit weaker. There is typically technically a pin bar. But in scenarios like this, you might just want to favor a more passive approach, going below the demand zone, because you can still target a 2 to 1. And then here, you got recent sentiments bullish, imbalance up, back into that demand zone. Good pin bar rejection there. Stop losses at the bottom of the demand zone. You want to give yourself a bit more cover. Ultimately, you are targeting a 2 to 1 with the highs. So there are good elements there, and slightly unfortunate it doesn't go in your favor. Pound New Zealand, you got one candle balance, imbalance down, touch. Yeah, there is rejection there. Stop loss placement right at the top of the supply zone. So difficult areas, but you might want to potentially consider aggressive. If it is pound New Zealand, 5 pips probably is there. So you can probably target 2 to 1 with an aggressive stop loss. So you've got bullish momentum, balance, good, imbalance, touch, rejection, continuation. Yeah, very good. And then you've got more of a bullish continuation here, breaking those highs. Touch, that's a weaker, yeah, that's starting to become a less valid confirmation. Better confirmation there. But then you're saying to yourself, if I'm entering there, then I'm going to be anticipating new highs. But that one isn't the strongest pin bar rejection. Alexandra, so clarifying targets based on recent highs and lows. Are you typically looking at the previous area of supply or demand, or more like highs or lows from the past couple of weeks or months? So, for example, my Euro Swiss demo trade would aim for a 2 to 1 risk reward, and this setup be considered unrealistic. So, in this Euro Swiss example, yes, that would become more unrealistic. You want to be able to target those recent lows there, ideally. That would be more favorable, but you can still target daily and weekly levels. It's just riskier. And then your stop loss is becoming a lot more passive. There's a lot of price action to your left. And then could you please clarify how you define narrow consolidation? So I know you've mentioned needing at least 2 small body candles with limited price action, but I've also seen examples you've shared where the candles are larger, or the case where there is just, or there is even just one single candle. So if we look at my example, so here, this is technically a weaker supply zone because only one bullish candle, but momentum is bearish. We then had the retest and that weaker pin bar rejection. So it's not the best setup by any means. So it's not a grade A setup, but there are good elements where you're going with the momentum and you're seeing an immediate rejection. So yeah, single candles can still be considered, but just see them as less favorable. If you start to see a later confirmation, it could be a signal that, okay, let's wait for a deeper retracement. And when there are major news events affecting major currencies like US dollar or euro, do you ever choose to sit out from trading completely that day, even with pairs not directly related to those currencies? So yeah, absolutely. Non-farm payroll, CPI, interest rate decisions, these are really good examples where you just look to stay on the sidelines. And lastly, on Fridays, if you see a really nice setup early on a Friday morning, do you take it knowing that most likely it won't hit your target by the end of the day? Still take it. And then in most cases, look to close before the weekend. But yeah, if you see a good setup, there's no reason for you not to take it, apart from not being active later on Friday on the charts to close it before the weekend. Then yeah, look to take the trade still. Daniel, so the question about the trade setup on the far right, it was a very good setup, but the rejection just didn't get to touch the demand zone. So this one here. There's also a flip zone above, so it wasn't certain. Slow to execute. What rules can we use in such circumstances to help us not hesitate, but be more decisive? So the actual flip zone that you're referencing here is certainly a weaker area because you want to be making new highs essentially, and then the break to happen, like we went through with US dollar yen earlier. Here, I'm not too sure that area that you define there, but it'll be previous bearish before the move up. But note how we're not making new highs at that point. But with regards to this level of demand, now, if you do have a strong confirmation candle, bullish engulfing, not quite touching the demand zone, but you can target 2 to 1, all the other elements are going for you, that is still a consideration. So yeah, you'll be very much looking at long positions there in that example, rather than the flip zone. And Jack, you have a similar question to, I know you said that you avoid high impact red folder news events by closing your position early, but do you ever close your positions based on price action alone? So for example, strong bullish momentum leaving a demand zone, then a bearish engulfing candle forms, or perhaps there's a breaker stretch to the downside. So you've had mixed results when backtesting this because price can often look so choppy or slow, signs of reversal before it will continue in your original direction. So, or do you just let it all trades play out unless high impact news is coming? So yeah, it is very much just high impact news events, weekends looking to close trades, not based on recent price action. So that example went through at the beginning with euro yen. That was on the cafe. Very bullish overall, failing to make new highs, had that near touch. Instead of avoiding the trade or looking to cut the trade, just reducing my risk. Megan, new to the cafe, so welcome. In the book, it mentions that you have 3 reversal candle setups that you look for. I noticed in the vault, you mentioned a free candle swing as well, but it didn't mention the tweezer, which in the book are there 4 reversal candle setups in total. Is the 3 candle swinger version of the engulfing candle. So the tweezers are viewed as your second pin bar confirmation, essentially. So if you enter a trade or look at entering a trade, but you're an hour later, you're seeing the same rejection, that tweezer rejection, you can still look to enter. And then do you ever set a limit order for your strategy or only a confirmation entry, as we are waiting for the reversal candle before entering? So it's always market orders for supply and demand and limit orders for order blocks. So yeah, not limit orders for supply and demand. Giavonte, so I believe I understood your strategy from what I've learned through your videos and the quick win program. Here are some pictures just to analyze. So right to look at demand zones based on the sentiment here. I think this is recent price action. Got imbalance. You closed below the demand zone and then confirmed. We've got confirmation there, so that's okay. Your confirmation would be there. Just note how your stop loss is going to go below the wick there, which is good. You're going to be expecting new highs, making it trickier. But yeah, that's not too bad at all. And then that short trade is off that bearish engulfer, I presume. Not sure where that's taken from, the supply zone, but it could be weaker given the recent bullish momentum. If it's US dollar CAD as well and it is recent price action, yeah, that's it's becoming more and more bullish. So that would be a weaker supply zone as well. And then Michael, so I'm starting the quick win the 17th November. Going to be using Apex Trade on once I'm ready to live. They only allow same day trades. Can supply and demand strategy work on trades within the same day? Or is it typically better utilized for swing trades? So day trades are overall less likely, but they do happen. You can have a trade for 3 or 4 hours. But yeah, that would be a risky one if it is just day trading. And also, can it be used on futures market, such as ES minis? So no, I only focus on the spot market, not the futures. Then Pam, quick risk management question. Just wondering if there is a recommended percentage of loss to stop trading in a month or a week. So, yeah, I mean, if you're hitting 2% -2% for the month, and you're halfway through the month, and you have suffered loss after loss, where you see, let's say, 10 or more, this is an opportunity to start reducing your risk or reducing your lot size on trades even further, keeping it really, really tight, or even just taking a break away from the charts if it is starting to become stressful. For me personally, I always like to try and keep as close to 1% at all times, so not risking more than 1% of my account. Even if I've got 5 trades on, meaning 0.2% on each trade, technically, just trying to keep it as risk management is very, very important. So never overexposing yourself, especially if you are trading multiple correlated pairs. And then Star, been practicing your supply and demand strategy and waiting this setup on British pound, US dollar. Could this be a possible setup? So if I'm looking at the supply zone here, definitely that area there. Balance, good, imbalance. But I'm not sure about this particular area here. But yeah, that area there, certainly we've got your breaker structure. Yeah, spot on. And that was the last question. So thank you very much for your time, everyone. Really appreciate it. And I will see you all soon.
Lovely. Well, thank you very much, Alex. Wasn't that good, guys? Wasn't that good? Hang on, let me turn on chat so you can all say thank you, Alex, for telling us the capital city of Jamaica. Lovely. Brilliant stuff. Brilliant stuff. So, folks, we have, I've got the reason I'm here now is it's a rather special time of year for all of you folks. So I'm going to share a little video and then we can have a little chat about this afterwards, about the trading. Well, in fact, just before that, there is a couple of questions in Q&A, which I think I'll probably answer. So VJ, the first one, I think, get Alex, your feedback on this one. So VJ asks, would you look further down to like the 15 minutes to seek a confirmation candle for entry, or just stick to the 1 hour as a minimum? I'm presuming this would be for supply and demand.
Yeah, just the 1 hour. So no need to go any lower than that. 15 minutes, 5 minutes. It's just the 1 hour for your confirmation.
Brilliant. And then the last one, I think I can answer this one. Charlene McCracken says, I was approved to join yesterday. Is there a very beginner course on this and other strategies? Well, there is, but you're going to probably need to do some more beginner baby steps courses before that. So if you go into the cafe and literally start at the top left where it says start here and work your way through, there's preparatory courses that will get you up to speed so you have a bit of a logical progression, Charlene. And then, of course, it's a beginner related. The entire principle behind the education here is it's holistic. So in fact, it's probably best if you don't have any knowledge, because it's terrible if you've already got existing knowledge, then you need to unlearn it and then relearn new strategies. The temptation is always there to sort of bring in your own little bit of seasoning, which ruins the dish very often. Right, so thanks for that. Now, folks, I'm going to share a video for all of you soldiers who've been here for the entire session and actually made it out today. So let me find it. Here we go.
Now, before we start this video, I have to tell you that it's that time of the year where you can get a 50% discount on the Quick Win program for Black Friday. Now, for the last year or so, the 28-day Quick Win program was $200 with a $5 7-day trial, allowing you to check it out without much risk. However, for Black Friday cohorts, you get a full 50% discount. So this means that the trial is only $2.50 and the remainder of the program is just $97.50. So last year, these Black Friday cohorts filled up really, really fast. We sold out super quick. So if you've been thinking about joining the Quick Win program, then we suggest you do so now. Now, there's another reason as well, because in January 2026, we're increasing the fees for this program from $200 to $400. So this Black Friday deal really is an absolute must, especially if you've been on the fence and thinking, gosh, I need to join some of these students and do this. So as always, everything is fully refundable at any time and for any reason. Back to the original video. Hey everybody, so we hope you all enjoyed this session with Alex Morris. Now, thousands of trades have been submitted by students from inside of the Trading Academy, testing Alex's supply and demand strategy, the very strategy you've been learning about today. And at the time of making this video, it's over 3,600 trades. So by the time you watch this right now, it'll probably be more. Now, in the comment section, I want to ask you a question. Can you guess what the average win rate is for students who have learned this strategy? I'll give you a moment to put your guess inside of the comment section. Don't be shy. I know this is a video, but you are live on with other people and we want to see those comments come through. Okay, so let's take a look. Keep putting in your answers. Can you guess what the average win rate is for students who have learned this strategy? So if you go into the spreadsheet here, we can see that the average student has achieved a win rate of 60.92%. So 6 out of 10 trades win. However, something really interesting about Alex's strategy is the fact that the risk reward is so high. Usually he targets 2 to 1 with his trades, meaning that a 60% win rate can give you an enormous return. So let's take a look at that. Put in the comment box, what do you think the average return per 300 trades are? Put the percentage in the chat box. It doesn't have to be compounded. In fact, put it uncompounded. Just what do you think the average return per 300 trades are? Because after 300 trades, how much is it possible for your account to grow based on what students have submitted? So I'll give you a moment. Let's take a look. Okay, drum roll. The average return per 300 trades is 212.64% as of the making of this video. If you got it right, then congratulations. Give yourself a pat on the back. But what does this mean? Well, these are back-tested results submitted by students, meaning 1, it's possible to learn the strategy. Students from all walks of life have mastered the strategy component of trading. And we're not saying that you're going to live off your trading income or amass vast fortunes. It's possible, but it's not worth thinking about until you can master the strategy itself. Learning the strategy comes first. Making the money comes later. And there are lots of students from different ages and backgrounds who have gotten to that point. Usually, trading professionals don't really know how to transfer what's in their heads to students. So even if someone on YouTube or Instagram is fully legit, they may actually suck at teaching this stuff. They don't have the education component. So what if you can join a school that understands education principles and has a track record of students learning a strategy properly? That would be pretty cool, right? That's what we're doing here. So what else does this mean? Well, number 2, the strategy works empirically. The sheer number of students and trades spanning all sorts of market conditions and time periods mean the chances of this working due to luck are 0. It's statistically impossible that so many people get similar results. So not only is it possible to learn, but it's possible to learn a fully tested, profitable strategy where there are no question marks over its validity. And number 3, you are actually in a perfect position to learn this strategy and others. So you are here live right now and you are watching this video. So you made the effort to attend this live event and pay attention. That means you personally are the exact kind of individual who could make this work. So we have found that people who attend sessions live and stick around are our ideal students. They get the best results. It just makes sense. And you are more likely to join the other students on this list that you're seeing in front of you right now. Now, for those of you who don't know, what exactly do you get in this program? So you will get access to the following courses for life. Simon Pullen's W&M strategy course. You can learn simple reversal patterns on the 1 hour chart. You get Alex Morris's supply and demand strategy course. So you can use his pink and green zones to get high risk reward trades. You're going to get Denny Dantev's Bollinger Band strategy course, where you can find big moves on the 4 hour chart and trade the pullbacks on the 1 hour. Then you get Denny Dantev's Fibonacci course, and you can trade Fibonacci reversals on any time frame. You're going to get Sid Nyman's Overbought and Oversold Stocks strategy course, where you can use RSI and MACD properly. And then each one of these courses that you get, you will also get quick win practice projects to get you using the strategies without risking your own money. This is the practice component that gets you to learn the stuff that is inside of the courses. Now, while you have access to these for life, you also get 28 days access to world-class support. Specifically, you're going to get 8 live question sessions per week where you can watch the instructors use these strategies and actions and get any questions answered, fully recorded. They also share their best trading opportunities in these sessions so you can kind of see how it works in real life. You then get 4 live support sessions per week to give you feedback on the projects and go through the markets with you. That's a total of 12 support sessions per week. You really only get 1 opportunity to ask questions per week inside of the Trading Cafe. Here, inside of the Trading Academy, you get 12. So it just gives you so much more opportunity to progress faster because we can just deliver more support in our paid program. So you're going to get all of your questions answered, even if you can't attend the live session, by submitting them beforehand. And here's a little tip. Watch the recording at twice the speed so you can learn them twice as fast. Exclusive access to the Trading Academy community where you can interact with more experienced and successful students is also available. And this is great because every single student on this list that you see in front of you right now is inside of the Trading Academy. These guys are more experienced than you, but they've gone through what you've gone through. So you're going to have access to a community of traders that are actually doing the work to become successful at trading. Now, we know this is a lot, but that's why you'll also get personalized one-on-one Zoom sessions with education advisors to guide you through everything on offer. So you'll never feel lost. So we're not talking about a financial advisor. We're talking about an education advisor to help you progress with your education. Because if you tick all of the boxes inside of our education infrastructure, you're golden. That's all you have to do. That's why you get one-on-one Zoom sessions where they'll literally get onto one-on-one calls with you every single week. And you can even send them direct messages or tag them in comments throughout your time here. We'll see you on the other side.
Ooh. Lovely. So there you go, folks. Thanks for joining. It said 21. There's probably less. So yeah, be quick or be dead. Couple of questions. Before that, before everything, remember tomorrow I'm going to be live doing some back testing. So we're actually going to be practicing what Alex taught us today. So you are more than welcome to join me. More than welcome to join me for that. And we can actually see if we can apply his rules with any degree of accuracy, which should be great. Got a question, Alex. Joined last week. Is there a chance of getting Black Friday? I tell you what, Alex. I tell you what. If you email info@thetrading.cafe, they should be able to sort you out. I'll put the email address in. info@thetrading.cafe. So. Send them an email, explain your situation, prostrate, they'll be able to sort you out fine. Also, there was Philip Spencer Walters. You joined the Academy last night. May I kindly ask if I can pay the £97 right now than wait for 7 days? Philip, patience. I mean, I guess it's theoretically possible. I guess you could email them. However, it's all automatically done. So should you decide to stay past the trial, it's then taken from your account. And fostering patience and embodying the long game is something which is very, very important to to trading. So sorry, I can't give you a direct answer on that. I'm not even sure if well, I certainly can't do it. You can email info@thetrading.cafe, Spencer. However, I would imagine it would be a very unique circumstance where that would be better than just letting it go and going, trusting the process. Right. Has anyone else got any questions before we call it for today? Speak now or forever hold your peace. Right, folks. Well, thanks all very much for joining. Make sure join me tomorrow for doing some back testing. And of course, biggest thanks of all to Alex for sharing his knowledge with us. So all of you have an absolutely splendid day.